You're welcome to Audit Assurance and Forensic class for skills level. Welcome to Equity Professional Limited. So I'm your facilitator for tonight, and today we are looking at chapter 6, which is audit evidence. Now, this is one area that is very, very important when you want to conduct or you want to carry out an audit engagement. This is so because this form the bedrock of whatever opinion that the engagement partner or the one we normally call the auditor will present at the end of the day. This is what form the basis of his opinion, is the amount of audit evidence that he or she has been able to obtain in the course of the engagement. So the relevant standard that talks about audit evidence is ISA 500. And we have the other standard that talks about sampling, because the chapter is audit evidence and sampling. So for sampling, audit sampling is ISA 530. So we are going now into detail of this. Now, I want to please mute your mic, everyone, please. You can hear some voices in the background. Please let all our mic be muted. Madam Edna, please let your mic be muted. Thank you. Okay, thank you. So, as I was saying, this is one area that ICANN loves to test. Okay, they love to test this chapter more than any other chapter, because it is expected that, because this is this for in at the professional level, this chapter takes the most onerous aspect of the syllabus of the years of the syllabus for the at the professional level. But for this, it's not that bulky, right? Because they will just want to introduce the audit evidence to us, okay, and sampling. So when we get to the professional level class, it's going to be broader than this. So let's go. So what do we mean by audit evidence? Now look at the word audit evidence. This is a compound word, right? We are talking about English now. We'll say it's audit evidence, two words joined together, right? But for audit, the paper that we are talking about, this is just a word, it's a terminology that they use. Some of those terminologies that we use in this paper, audit evidence. So rather than for you to be, when you talk about audit evidence, what does it mean? So audit evidence, according to the standard ISA 500, states that any information that is used by the auditor to arrive at an opinion on which his report is based is known as audit evidence, or is regarded as audit evidence. Any information, whether documented, whether recorded, whether in hard copy, whether in soft copy, any information that will aid the auditor to arrive at an opinion on the audit report, that is what we know as what? Audit evidence. All right? Now, when you talk about audit evidence has two main characteristics. But before we go to those two characteristics, it is expected that anytime you want to use or apply this terminology for your exam purpose or purposes, please always include this prefix. You know, in English, you have prefix, you have suffix. So here for prefix means before you write audit evidence, always endeavor to remember to write sufficient and appropriate audit evidence. Okay, don't just write audit evidence. Please take this down. Anytime you want to apply the terminology, audit evidence, do not just write audit evidence. Always include the prefix, sufficient and appropriate audit evidence. When you do that, the examiner will know that you have you have a better understanding of what you are trying to say than someone that just wrote audit evidence, okay? Then also, this word, it connotes so many things. Now, remember, rather than for you to be saying the auditor will gather information, analyze information, and do all of these things, to save you all the stress, just use this word. The auditor will obtain sufficient and appropriate audit evidence. That summarizes everything for you. All right. So while I also be using 3-4 lines to try to explain what audit evidence is, or trying to write all those other grammar, trying to explain what's audit evidence, just improvise with the terminology audit evidence. Now, audit evidence has two main characteristics. Okay, there are two main attributes of an audit evidence. When you talk about audit evidence, there are two things that are tied to that are related when you talk about audit evidence. That is, there's no you want to talk about audit evidence that you don't make reference to these two elements or characteristics, and they are sufficiency and what? Appropriateness. Sufficiency and what? Appropriateness. Are we together? Now, when you talk about sufficiency and appropriateness, what do we mean? Now, when you talk about sufficiency has to do with the of audit evidence that has been what? That has been obtained. All right? The of information the editor has been able to what? To obtain. That is what we mean by what? Sufficiency. If you want to highlight it further, for instance, you came back from work and you are thirsty, right? When you are thirsty, what do you use to relieve yourself? Either you take water or you take something that like refreshment to cool, to refresh, right? Good. Now, whatever you use to refresh yourself is tied to quantity. How many bottles of water did you use? How many sachets of water did you use? Okay, how many packs of juice did you use? It boils down to what? The number, which is what? The volume. So for audit evidence, when we talk about sufficiency, we are saying that as an auditor, before you can say that you have audit evidence or you have obtained audit evidence, you must ensure that that audit evidence is what? Is sufficient. All right. Now, sufficiency is a matter of exposure, right? Now, you not compare an auditor that has been practicing for over 20 years and compare with someone that's just a young auditor, maybe just has 2 years experience. You will not compare, understand? Particularly if such auditors happen to find themselves in some environment, say for growth. Okay, there are some audit firms when you work with the big four now, most of the things you'll be doing are usually stereotype, meaning that you'll be involved in one aspect of the engagement for a very long time. So you become an expert in that area, but in other areas you might not be that proficient. So you focus more on those areas. Unlike when you work with the other small medium audit firms, you work with small medium audit firms, you tend to be exposed more because in the small medium audit firm, they want you to learn, right? They will throw you just like they throw you into the ocean or in the sea. They tell you that swim. If you don't swim, then you are going to drown. So anyhow, you have what? You just have to survive. So if you work with the small medium audit firm, you are likely to be exposed more to some of these. And like I said, this is debatable anyways, okay? Some auditors will tell me that in the Big Four, it depends on your own attitude as an individual. Okay, so that is just for another level of debate. That's not why we are here. Let's go back to why we are here. So sufficiency, like I said, has to do with what? The quantity of information that has been obtained. Just like when you go to the court of law now, if you want to prove that somebody is innocent, what do? You have to present what? A lot of what? Evidences. If somebody did not commit a crime and the person has been accused that the person actually committed the crime, if there are no evidences or enough evidences to prove otherwise, such person can be convicted for crime that he or she did not commit, right? Because lack of what? Provision or presentation of what? Evidence. You understand what I'm saying? So for auditor, the more the evidence you're able to obtain, the better it is for the auditor when he's forming his opinion about that particular engagement. I hope that is clear. Now, because if the auditor is not able to obtain sufficient amount of information, what that does is that it increases the risk of it increases what? Audit risk. And I believe we have looked at audit risk in chapter 5 before I came on board now last Thursday. I believe you'll have looked at that. So audit risk is what? The risk that the auditor will issue an inappropriate opinion. So one of the reasons that can mitigate the auditors from issuing an inappropriate opinion is to ensure that it's able to obtain sufficient audit evidence. Okay. The second one is appropriateness. Now, appropriateness has to do with what? It measures the quality of audit evidence, right? Your audit evidence must be of what? Of good quality. And how do you define good quality audit evidence in audit? You will define it by two elements, right? So you want to evaluate how appropriate an audit evidence is. Then you have to be sure that whatever the evidence that you are looking at, that evidence is what? Is relevant and is what? And is reliable. All right. The information must be what? Relevant. Relevant means that it connects to the engagement, is related to the engagement. Okay. There are similarities to the engagement. That's why you say it's relevant. Okay. Then talk about reliability. Reliability has to do with the what? With the source. Okay. It depends on the what? It talks about the what? The source. What do you mean by the source? How did the information originate, or who originated that information? Who provided that information? So for auditor is very, very keen on how the information is sourced or how the information is obtained. Auditor does not just obtain anyhow information. They must be sure that the source of that information is what? Is credible. And another thing, they must also be sure that the information is what? Is relevant for the purpose of that engagement. So when you're talking about appropriateness, two things must be considered: relevancy and what? Reliability. Okay? You have to consider those two things, right? And what you need to also know is that evidence that is documented is not the same as evidence that is what? That is provided verbally. Because anything that is provided verbally can be what? Can be repudiated, can be denied. I can say that I never said so. Why? Because it doesn't what? Documented. Now, for you to prove the um, reliability of audit evidence, we are going to go to this, we call it the generalization of, we are coming back, okay? But I need us to go along as I explain, all right? Let's go to that place that explains how you test the reliability of audit. We have methods, okay? We have a way of testing or evaluating whether the audit evidence can be reliable or is reliable, okay? Let's go there. Now, this is it here. For you to test the reliability of audit evidence, right, there's what we call the generalization of audit evidence. That is, these are the methods or ways to evaluate the reliability of audit evidence. Okay, so number one, how do we test that the reliability of the audit evidence is reliable? Now, the reliability of audit evidence is increased when it's obtained from independent sources outside the entity. What does that mean? So what do we mean by this? What we are saying, ordinarily you are auditing a client, right? And the information ought to be provided by the client for the auditor, and the one the auditor will obtain individually by himself, right? So there is this thing with this information. Sometimes your client might not be forthcoming with information that is required, which is normally what we face when you do audit. When you go for audit, you request for certain information from your client will be stalling on providing that information to you. When that happens, it can be frustrating, right? Now, there are times where you will need to depend on external sources, external sources that have that information, or the imposition of that information that you are being asking from your client. Do you understand? So you need to be able to trace, you need to be able to identify those third parties or external parties. For instance, you want to audit a real estate company, for instance. You will not solely rely on the information that is provided by your client. Why? Your client can be trying to economize the truth and not coming forward with all the information. Okay, they try to manage the information. They don't want to have all the information. They just give you bits of that information. But an auditor, you might need to request for if they have any independent external parties that can provide that information. For instance, when you are auditing a real estate company, there is a need for you to require or to use the services of a surveyor, an architect, an engineer, and all of those people, right? Now, where the information is not forthcoming, or where you believe that the information that has been provided cannot be substantiated, you might need to depend on the information you obtain from those third parties, the external factors, the external parties. You understand? Because those ones, they don't have anything to hide. Most times they don't know what, they don't have anything to hide. They will come out as plainly as possible. But your client might be, because they are not too sure, they'll be skeptical as to, they don't know to what extent you want to use that information. So they will be skeptical before they provide some information to you. But for the expert, they will provide that information to you willingly. So that's what we mean by that. So when you obtain that information from those third party or external party, they do not owe the client any obligation. Okay? They will furnish the information as required or as requested by you. Number two, another way to test the reliability of audit evidence is audit evidence that is obtained by the auditor tends to be what? More reliable than audit evidence obtained indirectly or by inference. So the auditor that is doing the audit, he knows why he needs certain information. If he says he need A, I need B, I need C, you're going to provide him D, E, F. It's not the same thing as A, B, C that he requested for. But the one thing he has been able to obtain, then he is already convinced that this information is useful. This information can be applied or can be evaluated, can be tested. So it is expected that whoever the auditor is, the information he obtained on his own in the course of the engagement tends to be more reliable than the one that the client will provide, or the one that requires what we call guesswork. Inference, this terminology, inference, this terminology is what? It means like a guesswork. Okay? It's guesswork. That is, we are not certain. It's based on assumptions. Okay? So the auditor does not work on assumptions. They work basically on what? Documentary evidence or documented evidence. Okay? So the one he obtained by himself, knowing fully well that he has already gained understanding of how the client business operates, because you cannot audit what you don't understand in the first place. Okay? Number three, another way to evaluate the reliability of audit evidence is audit evidence that is obtained in documentary form is more reliable than the one that is provided or obtained orally. Like I said, whatever is not documented in audit does not exist. I think again, whatever is not documented in audit does not what? Does not exist. So the auditor will always count on information that you provide in a documented format. But where the information is furnished orally, the auditor will not utilize that information. Why? Because that information can be what? Can be denied. Can be what? Can be denied. So the auditor will always want something that is you are committed to. When you write something, when you present something, you cannot take it back that you are not the one that presented it because it bears your name. All right? So that is what we mean by that. So because if it's provided orally, it can easily be what? Be denied. The fourth one is audit evidence that is obtained by original document, or provided by original document, is more reliable than any evidence that is provided in photocopies, fax miles. Okay, what are you trying to say? Now you remember that there's always one original copy. Every document has one original copy. There is no document that bears two original copy. It's always what? One original copy. All right. Now, because it's just one original copy, it means that every other copy that you are going to obtain can be what? Could be adulterated or could be forged. So that is why the editor will always request for original documents, because they know that that original is always authentic. But anything that is photocopied, anything that is faxed, or anything that is scanned can be what? Can be forged or can be fake. Okay? So the editor will always request for original documents. So these are the ways, these are the methods, these are the assessment the editor will do before he can place reliance on the source of the information that is being provided. I hope that is clear. Any question? Question, comment, observation? Please, I want us to respond so that I know that I'm speaking to our students, right? Because when you don't respond, it's as if I'm speaking to the wall or I'm speaking to the air. Are we there? Any question?
Yeah, no question from me. No question, sir.
All right, thank you very much. So you have got that is clear, right? Now let's continue. Now, as an auditor, when you are about to commence an audit engagement, right? There is a need for you to properly plan your audit work. Okay, you plan your audit work such that you'll be able to obtain the sufficient and appropriate audit evidence. Now, what are we saying? As an auditor, as an auditor, right, there's what we call preliminary audit risk assessment. We call it what? Preliminary audit risk assessment. What that implies is that before you set out to an audit or to audit a client, first of all, you should have carried out a preliminary, that is an assessment that is done before the audit proper. That will give you insight into how you are going to develop your audit plan, right? The audit plan is a strategic document that shows you how you intend to achieve the audit objective. So, but if you have not carried out that preliminary audit risk assessment, then it becomes very, very difficult. Okay? It can become very, very difficult for you to be able to navigate or for you to carry out that engagement. Now, what do we mean? How do you do this? First of all, like I said, if you carry out that preliminary audit assessment, what does it do for you? You're able to understand how the client business operates. What are the processes? What are the procedures? Be able to understand what are the critical areas of the client business, so that you're able to focus on those areas and ensure that those areas are what are safeguarded. Okay, so but what you need to do in the course of carrying out this audit assessment, you carry out some audit procedures known as what? Audit tests. And these tests are called what? Tests of controls, substantive procedures. Do you understand? Tests of controls and what? Substantive procedures. So how do I mean? Now, prior to now, we have two tests, and those tests are called compliance and substantive testing. But as it is today, this is 2026, right? You are not allowed, you are not permitted to continue to use those terminologies. So there is nothing like compliance testing, there's nothing like substantive testing anymore. The two have been replaced with what? Test of controls and substantive procedures. All right. So what are tests of controls? These are tests that are carried out in order to ensure that the internal control system of the client business can be what? Is effective and is efficient. The internal control system is effective and sufficient. It makes it easier for the auditor, excuse me, it makes it easier for the auditor to be able um to obtain what we call a reasonable level of assurance about the client information that you will obtain eventually in the course of the audit. So the test that is done for the auditor to be able to ascertain or analyze whether the internal control system of the client business is effective and efficient is known as what? Test of controls. Now, that test of control is the first test that will be conducted. Most times, the outcome of that test will necessitate whether the second test should be carried out or should be conducted. The second test is known as what? Substantive procedures. What do you mean by substantive procedure? Now, substantive procedure is made up of two things. Okay? It's made up of two procedures. First of all, it is made up of test of detailed transaction and substantive analytical procedures. Let me explain. Now, you talk about substantive procedure, like I said, is another procedure that entails the use of what? Test of details of transaction and substantive analytical procedure. What do you mean by test of detailed transaction? Now, when you carry out that test of control, what do? You circulate what we call the internal control questionnaire or the internal control evaluation questionnaire. That's what you're going to circulate. After you have circulated it to the process owner, you will obtain the field copies of those questionnaires, right? After that, you are going to interview them, ask the process owner some questions. Now, when you are interviewing them, you are not interviewing them for them to present any information to you. You are asking them to confirm whether the information that they have provided in the questionnaire, that internal control questionnaire, internal control evaluation questionnaire, can be what? Can be relied upon. All right? That is what you do at that instance. Now, for instance, the auditor will be asking questions. Do you have an accounting, finance and accounting SOP? You said you have. Do you have a depreciation policy? You said you have. Do you have a capitalization policy? You have. Your answer is yes or no for test of control. It doesn't go beyond that. Now, after the auditor analyzes whatever the questionnaire is, right? That would tell him whether he will proceed to the next stage of what? Audit procedure. And that is when the substantive procedure will now come in. Now, in performing substantive procedure, like I said, it's made up of test of detailed transaction and substantive analytical procedure. What do we mean by test of detailed transaction? So, aside from asking questions whether they have the accounting policy, division policy, or the other question I asked, whether they have capitalization policy, okay? The auditor will be requesting for documentary evidence of those things. You say you have. When I asked you, when I was testing your test of control. Now, can you present me your finance and account SOP? Can you present to me copies of your capitalization policy? Can you present to me copies of your depreciation policy? When he's asking for those questions, then you're talking about test of detailed transaction. He has gone beyond just asking. Now, what he's doing is that he's requesting for the detailed information about that particular uh, audit evidence. Okay? Now, when you talk about substantive analytical procedure, what that implies is that, first of all, you understand by analytical procedures, so analytical review procedures. Now, analytical review procedures can be defined as a procedure that shows possible here it means PLAUSIBLE, possible, okay? Another name for possible is related, okay? It's a procedure that shows related relationship between financial and non-financial data. Anytime you talk about analytical review procedures, you must have more than one set of information. You must have comparative information. What that means is that rather than you to be looking at a period information, you need to compare between two periods or two or more periods. That's what you mean by analytical review procedures, okay? You are going to compare more than one period information. For instance, if you look at our financial statement, because since we have adopted the IFRS, we always have the comparative figure. If you're auditing 2025 now, The completing figure will be 2024. Do you understand? That's what I mean by that. So the composition of the substantive procedure is the use of what? Test of detailed transaction and the substantive analytical procedures. Okay? So these are the two tests the auditor will need to perform. When the auditor has performed this test will assist the auditor to be able to know how is going to allocate the staff, what is the audit strategy is going to adopt, because for every audit engagement, there are different strategies to it. How you intend to achieve the audit objective is what we mean by audit strategy. All right. Now, in the audit strategy is made up of your audit plan. So, audit plan entails your what? Your audit strategy. How you intend to achieve the audit objective. That is your audit plan. All right. Now, as an auditor, once you have that plan, right, you will need to break it down. You need to break it down into a granular task and actionable point. You need to break it down to what? Task and what? Actionable what? Point. What do I mean? So the audit plan is a strategic document, like I earlier said. It talks about how you are going to achieve the audit objective. Now, it's not broken down into granular details, right? That is why you need to get to prepare what we know as what the audit program. The audit program must be designed or developed in such a way that it reflects how you are going to achieve the overall audit objective. For instance, you are auditing a client now, right? You're, like I said, using the initial example, you're auditing a real estate company, and whether the you want to be sure whether the information that is contained in the account receivables is correct. What do you do? The objective is that ensure that there are no material misstatements in financial statements that is being examined. That is the audit plan. All right, that's the audit objective that's embedded in the audit plan. Now, how do you carry this out? So what you are going to do as an auditor is to break down that plan into granular level or into to-do task. So what that implies, you now say that, okay, first of all, I need to take a sample of, let's say, 20 or 30 of the customers to be sure that those figures that we have in a financial position actually exist. Do you understand? That's what the auditor will do in that instance. So when he's doing that, he's doing what we call the audit program. He's preparing what we call the what? The audit program. All right. So the audit program and the audit plan, please remember that they are not fixed. Fixed here means that they are not stable. They only become stable when the engagement is done. So what that means is that the audit plan or the audit program can change depending on whatever circumstances or circumstance that come about during the audit. It might make them to have a change of the audit plan. That means the audit plan is a revolving document until when the engagement is completed. I hope that is clear. So that is what you need to do. Now, when you break it down, why do you break down your audit objective? You want to be sure that the risk of material misstatement as contained in financial statement has been what? Has been reduced to an acceptably low level. All right. So the audit plan, like I said earlier, which I believe we have been discussed just a little bit about it in chapter 5, is a document, like I said, that shows you the direction where you are going and how do you get to achieve your audit objective. Okay. Why the audit program has to do with the how to do it, how to achieve it. That's what that talks about. Okay. So, like I said, the audit plan is a document that shows some of these decisions. Number one, it contains the critical areas that you are going to audit. That's why I talk about the preliminary analysis assessment. That will have given you insight into how the business, what are the critical areas for the clients. Okay? Be able to identify how many staff you require. When you do the preliminary audit, you'll be able to identify how many audit staff you'll be required. But if you don't do, you might have provided for limited number of staff or even inadequate number of staff, which could affect the engagement. So that's another thing, okay? Then it can also use it to also determine the level of your materiality, because materiality here talks about how you intend to reduce the risk of material misstatement that you have in your financial statement, okay? So all of this information is contained in the audit in the audit plan, all right? Hope that is clear. Any questions so far? Questions, comments? Questions, comments? Observation? Question, comment, observation? Are we good? Please always
Yeah,
respond though, so
good.
that okay, thank you. All right, thank you. So let's continue. So we move to the next area. We'll come back to this one. Let's go. Let me explain something before I come back to this. Now, for the auditor to be able to obtain audit evidence, right? He needs to be able to devise procedures that he will use to obtain the audit evidence. Now, one thing is for you to know that you need audit evidence. The other thing is for you to know how you are going to obtain the audit evidence. So there are two different things, okay? Now, you know that you need audit evidence. You need sufficient and appropriate audit evidence. But sometimes you need to look at how do you intend to achieve it. Now, these procedures that you're going to utilize to achieve this audit evidence, right, is not uh is not cast in stone, meaning that you must use one or you must use two. It depends on the nature of the engagement that will determine whether you are going to combine more than one procedure to obtain audit evidence or not. Because some of those procedures, some are more reliable than the others. Okay, not all of them are the same, but some are more reliable. You can rely more on some than others. Okay. Now, the only procedures we are looking at when you want to obtain audit evidence, the first one is what? Inspection. Now, audit inspection is based on examination of records or documents. Okay, and that could be done internally or externally. Inspection could also relate to assets, also relate to liability, also relates to equity interest. All right. For instance, if your client is into let's say manufacturing, right? As part of your procedure, or the procedure is for you to do what? Is for you to take a sample or perform an audit, a stock count, and ascertain that the inventory that your client has in their warehouse or they have in their warehouses, right? That those inventory, they are still what? They are still in good condition. Because sometimes some of them might some of them might be what? Stolen. So if you don't check those, if you don't test, you don't examine those inventories, right? You might be having material misstatement in the financial statement that is being presented. Okay? So inspection is one. Okay? You inspect documents. For instance, if your client says that he has obtained a loan, you don't just say, okay, we have heard you. You need to ask for the document. Can I say the loan document? From there, you'll be able to ascertain the amount that was approved, when was it approved, what's the repayment plan, and all of that information will be made available to you once you see that document. So inspection is one of the ways you can obtain sufficient and appropriate audit evidence. Okay. Number two is observation. Now, observation is another audit procedure, right? What this procedure says is that you note down uh you note down points when you examine how a procedure is being performed. I take again. Now, this audit procedure entails you taking notes or documenting information why your client is performing a procedure or a process. You are noting it. You are noting it that you are jotting down, or you are trying to document it. So for instance, when you perform store count, right? The auditor, the external auditor, most times what they do is to do what? Is to observe the audit, the stock count, whether the stock count is being done in line with the what? With the scope and plan of that audit stock count. Okay? You'll be looking at whether any of the items have been omitted during the count. It's going to be looking at all of those things. The other thing also, if there's a process that needs to be monitored or to be studied, the auditor will also utilize observation when he's trying to understand how a process is being done. For instance, the auditor can ask the client, what's the process like for receivables? What is the process like for what? For receivables, okay? How do you or how do you pay? Okay, or how do you I'm looking for a simpler way. What's your payment process like? That's a good one. What's your payment process like? So you said that, oh, when we have an ERP or we have the accounting software, you do this, you do that, and you do this, you do that on the system. As you are saying those things, the auditor is noting them down. So when he's noting down, those things that he's noting down, or when he watches you carry out a process or a procedure, that is what is known as what? Observation. Is that clear? That's number two. Number three, we have external confirmation procedure. This is another audit procedure. Now, this speaks to the information, the audit evidence that is obtained from an independent external body or external person or organization. Okay. So what that implies here is that the auditor is not relying on information that he obtains from the client. Rather, he's obtaining information from a third party. Okay? A third party. Example is one I made mention of. So you are into real estate, and you know that for real estate, particularly when you are carrying out your activity, it's not all the time that all your buildings will be on the same stage of completion. There are some of your buildings in the estate that are still at foundation level. There are some that is at lintel level. That is the level before the roof it. There are some that have already been roofed, right? There are some that they are doing what has been roofed. They are doing the screeding and what painting. So different levels of completion of the estates exist. Now, the auditor is not trained to be able to value the worth of those buildings that are not yet completed. The auditor is not trained. But there are people that is what they are known for. That's what they have spent all their years studying in school. Examples of those people are the surveyors and the architects. So a surveyor can tell you now that for you to build a three-bedroom flat, you need X number of blocks, X number of sand, X number of cement, and it will be accurate. So sometimes you need that information from a knowledgeable third party because they tend to have information that could be useful to the auditor. All right. So that is that. All right. Next one is recalculation. Now, recalculation is another audit procedure that is used by the auditor to check the arithmetical accuracy of documents or record that has been presented. Sometimes when the client presents some documents to you, sometimes you need to recalculate, you need to add up, you need to do your own analysis to be sure that what they are giving to you can be relied upon. For instance, you have a depreciation policy that says that any asset that is acquired, depreciation will start when it is put to use. That is what you have in your policy. Now, the fact that you have the depreciation rate, right? Now, you procure an asset. Let's say you procure the asset in July, let's say end of July, and you don't put that asset to use until August, mid-August, middle of August 2026. Now, you now did your depreciation, and your depreciation is for the time the asset is put to use to the end of the year under review. The auditor did his own calculation and is seeing that what you have as your depreciation balance does not tally with his own. And when he probed further, he observed that there is a month that you're supposed to use half month depreciation. You use a whole month depreciation because the month at the time you put asset to use, the asset was still was put to use in the middle of the month. So you cannot charge 1 month to it. That's what you have documented in your policy. So the auditor will need to recalculate and bring it to your attention areas where he disagrees on the accuracy of the information or recording of what transaction that has been provided to the auditor. Okay. Then there's what we call reperformance. Reperformance is another audit procedure that entails the independent examination by the auditor of procedures or controls that were originally performed as part of the entity's internal control. Just as I explained about the observation, this is the second leg of observation. Why do I say so? Observation, did I say? The auditor will ask questions and you'll be noting down those questions, those points that you will now test later. But in the case of a performance, he has already been briefed. He has already been debriefed of how the process operates. He will now say that, okay, you say you have a payment process. You have a payment process, okay? Now, let me test a transaction on your accounting software, whether accounting software or ERP. By the time he's checking those things on, trying to navigate through on the system, on the client system, what he's doing is what we call the reperformance, or we call it walk-through testing. We call it reperformance, or we call it walk-through testing. That process of going through how a process is being done is known as what? Walk-through process. Okay? Then we go to the next one, which is analytical review procedures. Now, this is another procedure that shows possible relationship between financial and non-financial data. Okay? It shows what? This is it here. It shows what? Possible. This is possible I was talking about. Look at it. It shows possible relationship between financial and non-financial data. What that implies is that when you're talking about I'm talking about analytical review procedure, like I said, you have to consider the the trend. Okay, for anything that has to do with analytical review procedure, you must have more than 1 year. You cannot use 1 year to achieve analytical review procedures. Okay, you need more than 1 year. Okay, to be able to carry out analytical review procedures. So let me give some instances that you know that talking about analytical review procedures. When you are computing your ratios, when you are performing or you are calculating your trend analysis, these examples are examples of what? Types of analytical review procedures where you utilize ratio analysis or you utilize the trend analysis. And for trend analysis, you are not using just 1 year. You start from 2 years and above. Okay. You are trying to measure the trend, the pattern of how the transaction has occurred. All right. That's what you are measuring when you perform the analytical review procedures. It's one of those ways to monitor the patterns, whether there is fluctuation, when information is inconsistent. Okay, that's what the auditor is doing in that instance. The next one is what? Inquiry. Now, inquiry is another procedure that is used particularly when the auditor is trying to what? Obtain information of how the client business operates. The auditor is doing what? Is asking questions. The auditor is doing what? Asking questions on how for how a transaction or how a process or a procedure is being what? Is being performed. Okay? Is asking how it is what? Being performed. Now, the information he obtains from here, what it does is that it further helps to give him a better understanding of how the client business what operates. Okay, here is asking questions. Now, somebody will say that this one is similar to observation. Observation is watching how a control activity is being done. Is watching how a process is being done, and is noting down his own opinion or his own point. In the case of inquiry, is asking questions. Okay, is asking questions for him to be able to have a better understanding of how the client business operates. Okay, so as to also make the the auditor will be able to obtain sufficient and appropriate audit evidence. All right. Any question? Yeah, good, right? So let's continue. We go to the next one. Now, what information can be used as audit evidence? Now, what you need to understand is this. As an auditor, right, any information that you know that is going to enable the auditor to achieve his audit objective is what we know as what? Is what we can regard as what? Audit evidence, okay? Any information that can assist the auditor to arrive at an opinion that the financial statement does not contain any material misstatement based on the sufficient and appropriate audit evidence that has been obtained. That is the information that is useful, that can be considered as what? Audit evidence. Okay? I hope that is clear. Any question? So let's go back. Let's go up. Since I've explained this one, so let's go. The next we want to look at is what we call the financial statement assertions. Okay? We call it what? Financial statement assertion. What are financial statement assertion? Now, these are statements made by management to the auditor that the financial statement presented and prepared do not contain any material misstatement. I take it again. This has to do with information that is provided by the management to the auditor, explaining that the financial statement presented do not contain any material misstatement. Okay, and there are three types of financial statement assertion. We have assertion based on transactions and events that speaks to information that can be obtained from the statement of profit or loss and other comprehensive income. We call it assertion based on what? Transactions and events. The second one is assertion based on account balances. And this one, you can find this one when you are reviewing the statement of financial position, okay? And lastly, we have the last one, which is what? Assertion based on presentation and what? Disclosure. So these are the three types of assertions that we have, okay? Let's look at them one after the other. At what point do you use this one? The one that has to do with assertion based on transaction and event. Like I said, you utilize it when you are reviewing or examining the statement of profit or loss. Okay, that's what you are going to talk about this. So the first thing so what you need to know here is, like I said, the management will make those assertions that whatever they are giving the auditor is authentic, is correct, is accurate. The auditor will now say that, okay, for me to be sure that it's accurate, I have to test that information. So the testing of assertion is done by the auditor, while its management is responsible for declaring the financial statement assertion. I hope that is clear. All right, so we look at those you look at those assertions here under the assertion based on transaction. Number one is occurrence. Now, in the statement of profit or loss under comprehensive income, there's a need for the auditor to establish that all the information that is documented or that is included in statement of financial in statement of profit or loss actually occur. The auditor will test, okay, whether transactions or events that have been recorded, okay, have what? Have recorded and pertain to the entity, particularly when the entity has sub-subsidiaries or subsidiaries. You need to be sure, you need to trace those transactions to each of those subsidiaries, okay, if need be. All right. Second one is completeness. So as an auditor, right, you need to test whether all transactions that should have been recorded have been recorded. So there are times when, in the course of the month, or period under review, there are some transactions that might not have been what properly captured. For instance, if you always do payment on account, maybe a manufacturer, you always do payment on account. Most times you tend not to follow up on the obtaining a proper invoice or way bill from the supplier because you are paying on advance. Okay. Now what we are saying here is this: for this payment, for this transaction, for it to be considered as to have occurred, right, we must be able to obtain all necessary supporting documents to back up this transaction. For instance, like I said, the invoices, the way bills, if there's need for PO, we need to attach it. Any information that tends to show there's commitment between your organization, within the client organization and the client organization and the supplier. Okay. That's what we are saying. Then the next one is accuracy. So the auditor will test whether amount or other data relating to recorded transactions and events have been what recorded appropriately. What that implies is that the auditor will test the identical accuracy of all transactions in financial statement, because sometimes there might be some omission. Okay, there might be some errors that were not detected, and that will not still affect the financial. Um, it might not affect the financial statement. Okay, why did I say so? Well, let me just explain. So, for instance, if there is a transaction that needs to be included and the information or the transaction is not included, what has happened? It does not change anything in the financial statement, but it shows that there is a material misstatement, okay? Because there is an omission. And that omission would have whether increased or reduced the balances you have in that statement of statement of profit or loss and that comprehensive income. Okay. The next one is what? Cutoff. Now that cutoff, what do we do? The author wants to be sure. The author will test whether transactions and events that should have been recorded in the correct accounting period. What does that mean? Now, for those of us that work in an organization where we 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 receive salaries, okay, right, or we have month-end closing, you agree with me that for the month-end closing, they always tell you that maybe you have 2 days after the month ended. And for payroll, sometimes when you join the company towards the end of the month, they'll tell you that they will not pay you salary for that month. Rather, they are going to prorate it and add it to your next month's salary. Why do you think they are doing so? It's because they have a cutoff procedure. There's any transaction, any recruitment that is done on so and so date cannot be what? Cannot be paid until the next month because it has exceeded the what do you call it? The current period or the period that's supposed to be under what? Under review. All right. Then we have classification. Now, classification, the author will test whether transactions and events are recorded in the proper account. There are times when there is an omission, okay? Error of omission or error of commission in the postings into the individual account. For instance, what do you mean by error of commission? So there are some transactions that maybe you have two suppliers that bear the same name but different initials. Okay, for instance, you have A Bello, B Bello. A Bello is what you wanted to record the transaction against. Now, when I record it against B Bello, your account will still balance, right? It will, but that does not mean that there are no errors in that financial statement. So, the auditor wants to be sure that you have posted into the appropriate account. Okay, you posted to be looking at your chart of accounts, you're able to post to the appropriate account heads or account code. Okay, so these are the assumptions the auditor will be testing under the assumption based on transactions and what event that speaks to the statement of profit or loss and that comprehensive income. Any question? Question, comment, observation? We move to the next one. Assumption based on account balances. And like I said, this one relates to the statement of financial position. What do I mean? So the auditor will test for existence. Okay. Now, what do we mean by existence? The auditor wants to know whether assets, liability, and equity interest exist. Sometimes you might have some fictitious account. Okay. Sometimes you have what? Some fictitious account that they will not exist. All right. So as an auditor, you need to test whether those assets that they have put in those books, they actually exist. You might need to do some random sampling to be sure that those assets, you cited them. Okay. It's very, very important. Okay. The second one is right and obligation. What do you mean by right and obligation? Right and obligation talks about two things: right to an asset and obligation to liability. It's two things combined. Okay. Right to an asset, then obligations to liability. So, what do we mean by right and obligation here? What we are saying here is that, first of all, what is an asset? An asset is whatever you use to generate economic benefit, okay? Whatever is used to generate economic benefit is an asset. So sometimes these assets, you don't own them. Sometimes you lease them. Sometimes you hire them, okay? You do not own them because of the cost, the huge cost of what? Of owning them, okay? So what do? You lease, okay? You lease those assets. So what we are saying here is this. once you are leasing that asset, the auditor one of the ways the auditor will know whether you are leasing that asset is if you're able to provide the document that shows that these leases are being serviced as expected, okay? If these leases are being serviced as expected, okay? That's what you mean by that. So, and when you are recording it in your books, you don't bring in the actual cost of that asset. For instance, if you are into what do you call it now? Airline business, okay? Airline business. Now, airline business that you are into, right? Airline business that you are into, sometimes you might not be able to, it might be impossible for you to buy the aircraft. Okay, what do? You lease the aircraft. So the value you are going to include in your books, according to um IFRS 16, is the lease renter that you're going to include, not the actual cost, because you don't own the asset. You go and put the actual cost there, right? What you have done is that you have exposed the organization to the relevant tax authorities, and they are going to slam you for so many bills, okay, in that regard. So that's what we mean. And for your obligations also, you want to ensure that those obligations are being properly monitored. So later we test whether the entity owns or controls the assets, because sometimes you might own the asset, and sometimes because of the financial outlay or capital outlay, you might not be able to own the asset. You are going to lease it and continue to use it until you'll be paying rentals on it. Okay. Then we have completeness. Now, completeness cut across all the assertions. Okay. Only by completeness, they also want to test whether all assets and liabilities and equity interests that should have been recorded have been what? Have been recorded. What are we saying? Now, let's go back to IAS 16. IAS 16 is talking about what? Property, plant, and equipment. What does it say? It says that every asset, you should start every asset, right? The value you put for the asset in your books must be all the cost is then to putting that asset to use. What value do you include in your statement of financial position of an asset? It says that all the cost that is required to put the asset to use, cost of commission, the commission, freight, logistics, all of that, insurance, all of it will be considered. For instance, if you went and buy a generating plant, let's say a plant, let's say Meccano, 10 million, right? And what you only put in your books as value of the generator or body plant and equipment is 10 million. That will not be correct. Why? Because you need to ship that asset. Okay, you need to move the asset one way or the other, and that cost is supposed to be there. You need to service it, you need to put it to use. All the cost must be what? Must be added before you can say that the value you have for that non-current asset is what? Is accurate. Okay. Then go to the next one, valuation and allocation. Now, valuation and allocation, this says that the auditor will test whether asset liability and equity interest are included in the financial statement at appropriate amount, and the resulting valuation or allocation adjustment are appropriately recorded. What does this mean? Now, let's take our mind back to IS 36. IS 36 talks about what? Impairment. Right? IS 36 talks about what? Impairment. What does it say? It says that at least the asset that is contained in the financial statement of an organization must be what? Tested for impairment, against impairment at least once a year. So if you have not tested your non-current asset against impairment once a year, that means whatever value you are putting there as the book value for the asset is not what? Is not correct. Why? Because you have not tested them against impairment. Okay, whether the carrying amount is higher than the recoverable amount, okay, of that particular asset. So that's what we mean. So when you do that, you are going to have some variances, okay, which can be considered as what? Adjustment, okay, during valuation. For instance, you might have a building that's located in an area. Let's say that Lagos Calabar Highway, those houses that we have there, okay. Now, prior to the construction of Lagos Calabar Highway, maybe the value of the houses there maybe is about 100 million. But now that that area, they are able to construct an highway, the Lagos Calabar Highway there, the value of those assets there, we what? We quadrupled, we increased geometrically, okay? And when it increased, for instance, some owners of those assets will not perform impairment tests of those assets. They will still leave it, the historical value of that asset still the way it is. And sometimes that information can be what? can be misleading. So that's what we mean by valuation and what? Allocation. Okay. Any question? Question, comment, observation? So we move to the last assertion. Assertion based on presentation and what? Disclosure. Now, this one affects both of them, okay? Because whether you're talking about statement of financial position, you're talking about statement of profit or loss, right? Whatever you are talking about, right? It still boils down to how they are how they are presented, as explained in IAS 1, that talks about the presentation of the financial statement in line with what? IFRS. So what that implies is that necessary disclosures also are required for whoever is going to um, obtain a copy of the financial statement. There is need for all disclosures to be made that we necessitate the understanding or the comprehension of the financial statement. Okay, it needs to do that. That's why we are looking at this one now. Now, and what that implies is that what's the trick here? The trick here is that we are going to combine the assertions that you have in both the first one and the second one, that in both the statement of assertion based on transactions and events and assertion based on account balance, you're going to combine them. The first one, you have occurrence and right and obligation. You remember the occurrence is in what? Assertion based on transactions and events, and right and obligation is under what? Assertion based on account balances. What does that say? Is it that later we test whether events, transactions, and other matters have occurred and pertain to the entity. That is, they don't want to know that whatever that has been posted relates specifically to that particular client company. Okay. Then I said completeness is common to both of them. And what that says here is that we test whether all disclosures that should have been included in financial statement have been included. Like I said, the notes to the account is one of those components of the financial statement. So where it's not included, that means financial statement is incomplete. Okay. Then we have the next one, classification and understandability. This one says the auditor will test whether financial information is appropriately presented and described are clearly what expressed, that those disclosures are what clearly expressed. What that means here is that all the transactions, they have been posted into the right account, okay? And they also ensure that all the necessary disclosure that we aid the understanding of the financial statement have been what? Have been provided. All right? Then the last assertion here is accuracy and valuation. Here, the auditor is going to test whether information that are supposed to be disclosed have been what? Have been disclosed fairly and at appropriate amount. Okay? What that implies here is that it's not only about you carrying out a test, okay? We don't want to be sure that whatever you have tested is something that can be what? That can be measured, that can be relied upon, okay? That's what you are trying to do in that instance. So the auditor, he will test whether the financial and other information that has been disclosed fairly and at appropriate amount. Okay. Any question on those assertions? Class, any question on those assertions? Are we there? Question on those assertions? We are good, right? So those are the assertions, okay?
Yeah.
Thank you. Those are the assertions. So we proceed to the next area. All right. The next we are looking at is the method used, by the auditor to select items for testing. Now, the auditor, like I said, the auditor it's not practical for the auditor to assess everything that relates to the entity. It's not possible. What does he do? He devise a means to be sure that to a large extent he's been able to cover or able to achieve to a large extent a reasonable level of what assurance as for that engagement. Okay, what will he do? You will need to select. So the method that he has, there are three methods. Either he's going to select all items, or he's going to select specific items, or he's going to use audit sampling. These are the methods that are available to the auditor when he's selecting items for testing. Okay, now if he's testing 100%, what does that mean? Now, for it to be tested 100% means that the population of that transaction is very small and they are of large value. For instance, you want to you're auditing an airline company, right? You're auditing an airline company now, and you want to there's no how you want to count those airlines that will not be visible to you because airlines are something that is very, very obvious, very, very glaring. You can see it, okay? And you know that they occupy space, so there's no how you can have millions that will not be able to count, okay? You will always have something to count, okay? That's what we are saying here. So one of the ways is we are dealing with items that are of higher value, but the quantity is small. You might decide not to do any sampling. You might just select all of them at once and utilize them for that particular engagement, okay? Then there are times, and that's also need to note that there are times when, for you to also know whether you're going to use 100% is that the, what's it called? When you're using 100%, you have to be sure the items or the transaction must be uniform, okay? They must be uniform, or homogeneous, they must be uniform. So once there is homogeneity, right, of the transaction, okay, then it makes it easier for you to apply the 100% examination because they are of small quantity and they are very, very homogeneous, okay? The second one is selecting specific items for testing. Now, remember, for instance, you have your credit, you have your debtors, the account receivable balances. Now, for most organizations, you need to analyze, there's what we call aging receivables. You need to be able to analyze your receivables. Okay. Now, in the course of analyzing your receivables, for instance, let's say you have a customer, 100 customers. Out of those 100 customers, those ones that patronize you every month is just 20% of the entire 100 customers. Only 20% patronize your business. Now, those 20%, they also account for 80% of the revenue that comes from the what? That comes from the sales. Do you understand? 20% of your customers, they account for 80% of the revenue that comes from sales. What does that mean? What that implies is that, so the auditor will know. That's why the auditor needs to be what? To be exposed, okay? You must have that professional judgment, right? So if you're able to know that, okay, of this 100, only 20 are significant customers. The remaining 80, they are low value or low budget or low level customers. So you later will not be concerned with those. So you're going to focus on those 20 customers to be sure that all their receivables are being tracked and are being recorded as at when due. Okay. Then the third one is what we call the audit sampling. What is audit sampling? Audit sampling has to do with what? Taking a percentage from a population and using that result to conclude on the population. I think again, you take a percentage from a population and you use that information that you have gotten to analyze the entire population, okay? So what that means is that it's a method of selecting a sample of items to be tested which cover less than the total of the population. That's what I said, right? So you take a sample and whatever the result you get, use that result to conclude on the entire um population. That's what we mean by all this sampling. Okay, for instance, a guy will say that all women are wicked, right? All women are what? Are wicked. Now, if a man says all women are wicked, what that implies is that let's say there are about 3 billion women in the world. That means the man has discussed with the 3 billion women that we have all over the world. And we know that is impracticable. That is not possible, okay? Because that is not possible. Rather, for you to say all women are bad, you say some women are bad because you cannot use your dealings with one or two ladies to say that that is the general opinion or general opinion about women. That cannot be, okay? That's what we mean by that, okay? Now, for the auditor, right? For the auditor, he needs to document all his audit documentation. all his activities, all the information in the document. Okay, we are going to talk about that later. Okay, now in the course of sampling, right? There are different methods that you can use. There's what we call there's what we call random sampling. So random sampling is a type of sampling where all items in the population have equal chance of being selected. For instance, a raffle draw. Or for instance, there is a pool and the auditor should select certain people there. From that sample, right? From that sample, from that pool, every item in that pool, they have equal chance of being selected. But later is just selecting maybe one or two out of that pool. We call it random sampling method. Second method is systematic sampling method. What that means here is that the random starting point is choosing from the population, and then items are selected with a standard gap between them. For instance, every 10th item. So for instance, you might say that you want to know what's the average payroll in an organization. You take a sample from the junior staff, you take a sample from the supervisor, you take a sample from the management staff, and use whatever you average it. Okay. Now when you average it, that will give you what is the average wage bill, or what's the average salary of a staff that work in that organization. That's what we mean by that, okay? Then the third one is haphazard sampling method. Here, the auditor select the item in an arbitrary process that is not scientifically valid, okay? And the result of something will contain degree of biases. When you talk about haphazard means when the selection is done anyhow. There's no format, there is no template. He did it anyhow. Okay, we call it haphazard. Okay, so I hope that is clear. Now, in the course of selecting items for audit sampling, right? There's what the auditor needs to have at the back of the mind that there might be what some deviation. Okay, there might be what some deviation. Just like we have it in our when we are writing our projects in our higher institutions, where we have when we are in chapter 4 that talks about data collection and analysis, right? That talks about your degree of freedom, that margin of error. There is this either 5% or 1% of whatever you have gathered that might not be what? That might not be correct. Okay. So you give it either a 1% or a 5%. It seems we are looking at here. So where the sample that is collected is different when there are errors, okay? In the sample collected, right? Then we have what we call what? We have what we call what? The deviation, okay? We have what we call what? The deviation, all right? Deviation will occur when the where the auditor, in order to address the risk that the total individual immaterial statement may cause the financial statement to be what? To be materially misstated. So what he's saying here is that deviation here means what you expected, what you expected is different from what you actually achieved. It's what boils down to what we call what? Deviation. Okay, it's called what? Deviation, or we call it what? A misstatement. Okay, this is what you wanted to achieve. You have an idea of what you wanted to achieve. By the end of the day, you will not achieve that. So that is what? A deviation. All right. So as an auditor, the smaller the tolerable misstatement or the rate of deviation, the larger the size of this, the greater the sample size. What that means is that the auditor should ensure that you obtain large sample size. If your auditor obtain large sample size, right, the level of deviation will be what? Will be reduced. I take it again. When the auditor obtains a larger sample size, it makes his deviation, okay, to be what? To be reduced. Okay, it means to be what? To be reduced. So the auditor needs to be sure that he understands how the sample size is being what? Is being selected from the what? From the entire population. All right? The entire population. Any question? Question, comment? So we go on. So for those deviation, later we need to investigate why those deviations occur. Okay, it's one of the things that we need to do. We need to investigate those deviations and trying to see where the problems lies. Okay, it could be within the time period, it could be the type of transaction, it could be on the what, on the location. So later we need to review the sampling. Okay, the sampling, the sampling sampled result that he got, the audit sampling result that he got, and be able to see whether there are no material misstatements that are contained therein. All right, are we together? Okay, we go to the next one. Audit documentation. Now, the documentation, we are done with audit evidence, right? We are moving to another area, which is the audit documentation. Now, audit documentation and audit documentation, in terms of definition, they are similar, okay? So when you talk about audit documentation, what does it mean? It means it refers to all the information the auditor has been able to what? To compile all the information the auditor has been able to compile in the course of performing the audit in order to performing an engagement in order to arrive at an audit opinion. I think again is compilation of all the information the auditor has been able to compile in the course of performing an audit engagement in order to achieve or arrive at an audit opinion. That is your audit documentation. Okay. Now the relevant standard is ISA 230. Another name for audit documentation is audit working papers. Okay. So we talk about audit documentation. There are three documents that makes up, there are three records that makes up the audit documentation. Number one, the audit procedures performed, the audit evidence obtained, and the conclusions that was what that was arrived at. I think again, three records makes up the audit documentation. The first one is the audit procedure that has been performed. Number two, the evidence obtained. And number three, the conclusion switched. Okay. So the auditor must ensure that the documentation must provide a sufficient and appropriate record of the basis of the audit report. Like I said, it's going to assist the auditor, going to aid the auditor to form an opinion. Okay. Then the evidence that the audit was planned and performed in accordance with ISAs and applicable legal and regulatory requirements. All right. Now, the relevant standard, like I said, is ISA 230. Okay. Now, the auditor should ensure that he prepares his audit documentation. All right. He prepares what audit documentation in such a way that it will aid his opinion. Okay, or it will aid his arriving at his opinion. So what that means here is that the auditor should be able to compile all the information, all right, analyze it, and come up with what? And come up with what? An audit opinion. Okay. So the auditor is expected, right? The auditor should prepare documentation so that it enables, so as to enable an experienced auditor having no previous connection with the audit to understand the nature, timing, and extent of the audit procedure. Now, what you need to note here is that this audit documentation is domiciled with the auditors. It's not the document, it's not the property of the client. It belongs to the auditors. Okay. So when there is a change in auditor's appointment, then the incoming auditor can also request for this audit working paper to be able to have an understanding of what has been done by the outgoing auditor or audit firm. Okay. I hope we are together.
Yes.
Okay. So, like I was saying, in looking at the documentation, audit documentation, it's very, very important for the auditor to know that this audit documentation plays a vital role in audit engagement. Okay, how? What are the areas? How does it do that? Let's look at some of the importance of working papers. Number one, it serves as an evidence in a court of law. When the client says that the auditor did not do the work, but then the auditor presents the audit working paper, is a proof to show that the auditor has done his work. Number two, is also a tool used to monitor the quality control or system of quality management within an audit firm. Okay, system of quality management within an audit firm. So every audit firm that has a system of quality management, there's always a document or documentation that we call audit documentation that is being maintained and is exclusive to that particular audit firm. Okay, so the other Another importance of audit working paper is that it can serve as a reference point for future audit. Okay, it can serve as what? Reference point for what? For future audits. So for auditors that are just joining an audit firm, they can leverage on the old audit working paper to gain an understanding of what it entails. Okay, so that's another method. That's another importance of audit working paper. Okay, then it's also an evidence to show that the audit was conducted. Okay, it's an evidence to show that the audit was conducted. That is the proof that you carried out an audit engagement. That's another importance of audit working papers. Okay, so as an auditor, you need to ensure that you avoid as much as possible any unnecessary working papers. Okay, now what do we mean by unnecessary working papers? Now, any information, any documentation that does not support the auditor's report, auditor's opinion, is considered unnecessary. I take it again. Any document or any information that does not support the auditor's report, okay, auditor's opinion, should be considered unnecessary. Okay. So the auditor should ensure that the audit working paper that is going to utilize, right? He must ensure that it is going to serve the purpose for him to achieve the audit opinion. So a typical audit working paper, we have the following characteristics. We must have the following information: the name of the client, ABC Limited, the period covered by the audit. This period covers January 2025 to December 2025. Then the subject matter. This is the working paper for ABC Limited, the manufacturers of stationery in Lagos for the period this, and this. That's what we mean by the subject matter, okay? Then the file reference. File reference is the serial number that you use to retrieve the information. Okay, it's the serial number that you use to receive the information from the archive. Once you have stored it in the archives, that's the number you use to call up that particular document. We call it the file reference. Okay, every audit firm have their own unique file referencing method. Then the initials of the audit staff that prepared the audit working paper, the initials, that is the name and the initials of the audit staff that prepared the audit working paper, and it should be dated as well. Also, it should contain the initials and signature of the person that reviewed the audit working paper as well. Also with date. These are some of the contents of the audit working papers. Okay. Now, you also need to note here that there are two types of audit working papers. Okay. There are what? There are two types of audit working papers. There are two types. The first one is what? The permanent audit file. The second one is what? The current audit file. What is the difference between the two? I take it again. Audit working paper or audit documentation is made up of two files. The first file is permanent audit file. The second file is the current audit file. What's the difference? Now, the permanent audit file, as the name implies, contains information that's likely to be used for more than one audit. Because, are you there? Any question? Any question? Madam Nafiu, any question?
So we are listening to you.
No, I thought somebody was asking a question. Okay, we are good, right? Okay, fine. All right, so permanent audit file, what did I say? Is a file, it's an audit file that contains information that can be used for more than one audit because the information rarely changes. It can be used for more than one audit because the information rarely what? Rarely changes. Examples of those information: number one, we have the legal constitution of the company. The legal constitution of the company is what? The article and memorandum of association. Those are the legal constitution of the company, and they hardly change unless the object of the company has changed. Number two, other important legal documents such as loan agreement. Executed loan agreement cannot be changed. Okay, so we'll go into the permanent audit file. So a summary of history, development, and ownership of the business. How the business started, how the business expanded to where it is today. This information cannot be changed. It will be contained in the permanent audit file. Okay, a record of accounting system and procedures used by the client. So what that implies is for every organization, they have an accounting system that they are using, whether it's accounting software or an ERP, depends on the one that they want to use. The record does not change because most of the times the accounting system information can be kept for more than 5 years in some instances because they rarely change. Okay. Then copies of financial statement of previous years with key financial ratios and trend. So executed or old financial statement is also contained therein. Okay. So these are some of the information that is contained in the parent audit file. All right. Then the current audit file. This is a file that contains information that is of relevance in the current year's audit. It contains what? Information that is relevant in the what? Current year's audit. What that implies is that the audit that you are doing the current year, the current audit file we hold the information. Number one, some of the information you are going to have in the current audit file is the draft final financial statement and auditors report. It will be there. All right. A summary of audit adjustment, that is audit journals, will also be there. Audit planning documentation, audit plan will also be there. The audit plan is supposed to be changed every year. Audit control papers, those are the documentation or stationery that are exclusive to the audit firm. Example, time budget. Time budget here means it's going to tell you how long you're going to stay on each activity. So you're able to close out on it. Then you have the review point. So the auditor is being checkmated by his the engagement partner to be sure that he's moving on with the status, that is, he has improved on what he did yesterday to what he's doing today. That means tracking the audit activities. Okay. Then you have the audit letters. Audit letters entail the letter of engagement that should be revised every year, letter of weakness or management letter, and the third one, written representation or letter of representation. These are the audit letters, okay? And for each audit area, such as inventory, okay. So what that means here is that for every other information should be specific to that particular transaction. Then you have the audit plan. Then you have details of items selected for testing. The result of the test, okay, will also be included therein. All right. Then lastly, all the account schedules that the auditor used to prepare the accountant used to prepare the financial statements must be presented to the what? To the auditor. So this is the information that is contained in the current audit file. Any question? Any question? Then please
Yes,
note
sir.
also. Any question?
Yes, please.
Please
What
ask.
did you say? What did you say were audit letters again?
Audit letters are the management letters, which is also known as the letter of weakness. We have the letter of engagement or engagement letter, and we have the letter of representation or written representations. Is that clear?
I'm sorry. Did you say management letters?
Yes, management letter is part of audit letters.
Okay.
All right. Any other question? Any other question? Are we good? All right, so we continue. So what you also need to note here is that, like I said, the audit working papers or audit documentation is the property of the audit firm. I take it again. The audit documentation, audit working paper belongs to the audit firm that carried out the audit engagement. Okay. And what you also need to note here is that the documentation must be done within what? 60 days. Okay. The compilation of the audit documentation must be done within 60 days after the completion of the audit. So once the audit has been completed, right, the auditor will be given 60 days to compile its audit documentation before it is what? It is archived. Okay. You need to compile it to be sure that before it is what it is archived, because it needs ample time to collect all this information together. All right. So so after the assembly of the final audit file has been completed, the auditor must not delete or discard audit documentation before the end of the retention period. That is, That is, once you have stored that audit documentation, you can no longer destroy it. Okay, you need to keep it and manage it for as long as you use. So according to auditing standards, right, the audit documentation should be kept for as long, depending on the policy that has been adopted by the audit firm. Okay, because these documents sometimes can last more than 30 years. I worked in an organization before that we need to make reference to a transaction that happened 30 years ago. And our auditor went to the archives and extracted that information for us so that we could use it. Okay, so that is how important the audit documentation is. Imagine if that information, if that audit paper has been destroyed, then we won't be able to lay hands on that information that we later use. Okay, so that is what we mean. So if it does not become necessary to modify existing or add new documentation after this stage, the auditor must document when and why, when and by whom the modification were made. Okay, the reason he makes those those changes, then if there is a need for additional audit procedures to be performed and arrive at new conclusions. So sometimes there might be changes to the audit working paper. So whoever was responsible for the changes, that person must also be stated, okay? And the reason why there were changes to the audit working paper also need to be stated. Then there are times when there will be need for you to perform additional audit procedure. That also need to be explained. Then lastly, by the time you perform additional audit procedure, definitely you are going to arrive at new audit opinion or conclusion. Okay, hope that is clear. That is that about documentation. The continuation. Now, I want to ask a question. Can the client assist the auditor to prepare the audit documentation? Can the client assist the auditor to prepare the audit documentation? Who wants to try? I'm asking a question. Can the client assist the auditor to prepare the audit documentation? Yes or no? Yes or no? Who wants to try? Are you hearing me? I repeat my question. I said, the client, can the client assist the auditor to prepare the audit documentation? Yes or no? Anybody? Anybody? Yes, somebody is asking. Let me see. Somebody said no. Okay. Blessing, Martin, you said no. Okay, thank you. Any other contribution? Any other person? It's just an academic exercise. I want us to have this understanding once and for all. Any other contribution? Only Blessing? We have 9 people in this class. No other person? Okay, for this to save our time, let me answer the question. So you have a question like this, don't be quick to say yes and don't be quick to say no. Okay? Why did I say so? You don't know the side of the divide the examiner is. Whether the examiner supports the motion that the client cannot assist the auditor to prepare the working paper, or vice versa. What is not has done. Analyze such students. Okay, so what you need to consider every other person might be useful or might want that information. Trying to say you must put everybody in their position. So your answer is yes and no. Do you get it? I asked a question. I say, can the client assist the auditor to prepare the audit working paper? And the answer is yes and no. How? Yes, in the sense that the auditor, if the client is to audit working paper, they must have had a discussion around that at the early stage of the audit. Brief the client on what he needs to do, able to provide that information that will be considered as part of the audit documentation. That is the yes. The no here is that if this discussion did not take, the client could not to prepare their audit working papers. Okay? I hope you got that. I think again, yes, that is if was able to inform the client that I need you to help me to gather some information that will be added to the audit working paper. Okay? No, in such discussion, the client cannot help the auditor to prepare the audit working paper. And once that preparation is done, right? Once the preparation is done, it needs to follow the template or the format of the audit firm. And that's what they have explained here. What I just asked us, that's why I had to scroll down. That's what they have explained here. Okay? So leisure time, you can read it to understand. But that I've just summarized what is contained there. So your audit working paper should have the following elements. Your audit working paper should have the following elements. Number one, it should state a clear audit of the audit assertion. That is to ensure the completeness of trade creditors. That is, it must be the objective must be must be measurable, must be smart. Okay. Number two, it should fully state that the audit or the working paper belong to. Okay. For instance, you're auditing 2025. State it that it's for 2025. All right. Number three, characteristics. It should state the full extent of the test. How did they carry out the test? What was the result of the test? All of this should be included in the audit working paper. Okay. Now, where there is necessary reference to another working paper, the full reference of the other working paper must be given. So there are times where when you go for audit, you start from where you stopped the last time. So the auditor will request for the previous year's audit, and from there, maybe it's clear that the non-conformity that was reported has not been closed out. Okay, so what do you do? That's what we are saying here. Okay, so what we are saying here is that previous year audit working paper, it is allowed when you're able to document the full reference of that working paper as given. Okay, should state clearly and objectively state of the result of the test, that is the test that has been performed, without bias, okay, or facts that is based on fact and documentation documented. Now, the conclusion reached should be consistent with the result of the test. Whatever the conclusion you read, like I said, audit is scientific in nature. So if the test some inconsistency, there might be need for them to carry out further audit procedure in that regard. The audit document should be clearly referenced such that it can be filled when required at a later date. So the retrieval and the keeping of the audit documentation needs to be what? Needs to be properly referenced so that it is going to aid easy retrieval or in subsequent audit. Okay, it should be signed by the person who prepares it that so that queries could be directed to the appropriate person. So whoever prepares it must sign his name, and whoever reviews it also must sign their name. Okay. Now, the reviewer of audit working paper should ensure that every paper has their characteristics. Okay. So that is what it says there. So that's what the reviewer just explained. Any question before we go to the last area of what we are discussing? Computer generated audit working papers. Any question? Question, comment? Are we good to go? So we continue. So we go to the next one, computer generated audit working papers. What do we mean by this? Now remember, all what we have been discussing earlier was based on the traditional method of conducting audit before. We call it file. So all these information are contained in a file. But now there is no physical audit working paper. Your audit working paper, they are now what? System-based. They are now what? They are not system-based audit working paper. What does that mean? That is, they are contained on the system, your computer system. And because they are contained in your computer system, what does that mean? What that implies is that they are stored on the system. is that there's need for proper safekeeping of that information on the what? On the system. And that's why we talk about the software that you can use. So software packages that you can use. So most of the audit software packages, they have this audit documentation functionality or capabilities that have been embedded in them. Okay, it contains the analysis schedule, the lead schedule, and even the draft financial statement. They are all contained in the computerized audit working papers. Okay. Now, when you use computer to prepare audit documentation, what does it do? Now, the audit working paper are usually neat. Why? Because there is no cancellation, there is no error. All right? It's easy to read and it's always in a standard format. Number two, there's a lower risk of error by the auditor in processing adjustment. Why? Because everything's on the system. Number three, the audit review process by senior managers can be done remotely. You don't need to be there physically to carry out the review. Okay, it might be anywhere and carry out your review. So it's because of the system, computer generated audit that allow that to be done. Then there's automatic processing of adjustments by the auditor using the software will result in significant savings of time. So what that implies is that the auditor can also log in from anywhere, right? And prepare his own adjustments, and those adjustments are approved, then they are uploaded on the computer on their working papers or uploaded on their computer systems. Okay, so that is that. I've talked about this ownership, custody, and confidentiality of audit working paper. Like I said, the audit working paper belongs to the what? To the client. All right. I mean, to the audit firm. Sorry, belongs to the audit firm, and he must keep proper custody of it. The information must not be divulged to third party without proper approval. Okay, without proper approval, it must not be what? Must not be done. Must not be done with. All right. So I think that's all about audit working paper, audit evidence, and audit summary. Any question? Questions, comments?
Hello, sir.
Please ask your question. I'm with you, sir.
Sir, I want to do that. Can we get the recording of this class? Because this is my first time here, sir.
Oh, you are welcome. The recorded lecture, they will be shared on the platform. Once we are done, right? Just put it on that platform that you need the recorded lecture to be shared with you.
Okay, okay. And
Is
the
that
previous classes too as well.
all the classes too? Yes, can be shared. Will be shared with you.
Okay, okay.
Mm.
Because I want you to cover up.
No
Oh,
problem. It's fine. That's fine, sir. It's possible. It's available. All right.
thank you very much.
All right. Any other question? Are we good? So we are done with this. Let's try and see if we can have a what do you call now? You can look at a question that relates to audit working paper. Sorry, I need to look for that. So we'll use it to drive home the lecture to improve our understanding on what we have discussed today. So just a minute. I'm trying to look for a question that relates to that. All right. Sorry about that. Where is it? Where is it? Okay. Thank you very much. Let me share this with us and be able to have an understanding of what we are discussing, because it's very, very important for us to have an understanding. Okay. Now, this is an ICAN question, Pathfinder for year 2021, May 2021. All right. May 2021. Look at it here. ICAN May 2021. We're looking at the last question. That's question number 5. Question number 5 that we are looking at. Now look at the question. let's look at the question together. Now, what you need to note here is that, so like I said, one of the things we also do in the course of this class is to give you tips on how to pass the paper, okay? So what is the tip for tonight? Now, the tip here is this. If you go back to that, let's go up. Go back to chapter 5. Come down to the question 5. Let me show you something. Look at it here. Look at this instruction. You are required to answer 4 out of 6 in this question. Now, this one is not the same format of your exam. You understand? You are going to sit for in November. It's not the same format. What I meant here is that in the one you are sitting for in November, it's going to be 7 questions. They'll tell you to answer 5. Now, when they say you're going to answer 4 in this kind of question, and you as a student, you only know 3 very well, and you answer those 3 without answering 4, automatically you have not complied with the instruction of the exam. What that implies is that some students might not pass the paper because your answer does not conform with the requirement of the instruction requirement does not align. So when they say you should answer 4, ensure you answer 4. Okay? Don't go and answer 2. Say you can only answer 2. If those 2 are very correct, that some student might not pass the paper. And this is not only for this paper, every other paper. So please always read the instruction and understand the instruction very well before you attempt or answer those questions. I hope that is clear. That's just what I want to share with us. Let's go back to the question number 5. Now, Jack Professional Services is a member firm of James Candu International in Cayman Island. Cayman Island is in those Oceania, or what do you call it? All those Caribbeans, okay? Now, the member firm practice review exercise has just been concluded. As part of the global firm, practice review are done yearly on selected engagement files, where member firms review one another. Some of the issues included in this review note raised on Jack Professional Service are as follows. Number 1, lack of sufficient appropriate audit evidence regarding audit of cash and bank, as well as inventory balances. This was partly due to the fact that no evidence existed in the file regarding physical cash and inventory count, which were what material. Number 2, no proper documentation of confirmation replies received from banks, receivables, and receivables. Number 3, no cash flow working documentation to show how the figures in the cash flow statement in financial statements were arrived at. Improper documentation of how expected credit loss on financial instruments in the financial statement were arrived at. Number 5, figures in the financial statement could not be traced to the respective working papers. As an experienced auditor, some of the trainees were not impressed about the report and have approached you for what clarification. The requirements now. Meaning of sufficient and appropriate audit evidence. I've explained that to us, right? That is looking at what sufficiency, looking at what the quantity and quality of the audit evidence. Now, you're going to explain it, okay? Then number B, factors that could be considered when deciding the amount of audit evidence to be audit evidence that is needed. So, what are those factors that you need to consider? We'll look at that, okay? Next one, what auditors should do in case of inadequate audit evidence. Then reasons for sufficient and appropriate audit documentation. Those are the requirements of that question, okay? So what you need to note here is this. Now, there are times when you look at the suggested solution. The suggested solution is not an end in itself. It's just a means to an end. What am I trying to say? What I'm trying to say is that sometimes the solution might not be appropriate. Okay? So don't always be fixated on the fact that, oh, whatever they put there is always final. Sometimes they are not appropriate. Okay? I'm going to let us know when we get to the solution now. Okay? Because of time, right? Let's quickly go to the solution and see. We're able to answer the first one, right? Let's go to the solution and see how it was answered. We are going to question number 5. Because of time, right? I need to work within time. I don't want to keep us beyond the time. So this is it here. You can see this was number 5. We've seen the solution. So sufficient relates to, I've talked about that. I'm not going to waste our time on that one. We've seen that. The second part is how the regulator decide how much evidence will be sufficient. Number 1, the quality of the evidence is one of those things it's going to use, okay? Number 2, the seriousness of the risk. What's the risk of material misstatement that entails that financial statement? Number 3, the materiality of the item. Number 4, the strength of the internal control system in the client accounting system. Number 4, the sampling method that the auditor will use to obtain the audit evidence, okay? All of these are the methods, okay? All of these are the methods that can be used by the auditor to determine whether the audit evidence will be sufficient or not. I hope that is clear. The C part, what auditor's rule in case of inadequate audit evidence? That is where audit evidence is not sufficient. What should he do? He will need to obtain additional evidence by means of more tests of controls and more substantive testing procedures. Okay? Then discuss the problem with the client senior management or the audit committee or those charged with covenant so that they are aware of the problem. Okay, that means you need to have a discussion with them, let them know that this is the situation we find ourselves. Number 3, indicate the findings from the audit evidence obtained that should be included in the management letter. All right, so the audit by the auditor. Then make inquiries of management and verify management responses and perform other audit procedures as appropriate or as necessary. Then you need to issue a qualified audit report. That is the last thing you need to do there. Okay. Then the C part, reasons for preparing sufficient and appropriate audit evidence. What that does is what are the reasons? What's the importance of having a good audit evidence? Number 1, it enhances the quality of the audit. Okay. It facilitates the effective review and evaluation of the audit evidence obtained and conclusions reached before the audit report is finalized. Okay. Then documentation enables the auditor record the audit evidence which serve as basis for determination of the audit opinion. Okay. Then documentation prepared at the time the work is performed is likely to be more accurate than documentation prepared later. Other purposes of audit documentation include assist the audit firm to plan and perform the audit. It also assist supervisors in directing and supervising the audit. Then ensuring members of the audit team are accountable for their work. Then others, keeping a record of matters of continuing significance to future audits. Then enabling an experienced auditor with no previous connection with the audit to conduct quality audits. This is for future audit, making reference, using it as reference point for future audits. Okay. So you can see the question. This is 2021 May. All right. You can see the question. So the question test students, candidates' knowledge on audit evidence and audit documentation. 80% of candidates attended the question. The understanding of the question was fair. The comments with for was the candidate solution in part B to D were generic and not related to the factors that were decided the amount of audit evidence needed and the reaction of the auditor to inadequate audit evidence. Okay, so you can see. So that is how it is done. Any question? Question, comment? Are we good? So that is audit evidence for us, okay? So grab your Pathfinder and search for questions on audit evidence and something that we have done so that we can so that we'll be able to get familiarized or acquainted with some of those information that you have there. All right. So the answer of any question, in the answer of any question, we can call it a day for tonight. And we are going to reassemble next Thursday by the grace of God, God's willing. I think that's all for my end. Are we together? Any question? Any comment? Any observation? We are good, right?
Yes,
All
sir.
right.
Thank you very much, sir.
All right. Have a good night. Take care.
Thank you, sir.
All right. Good night.